Hello and welcome to another update video about Bitcoin. Just a quick update. Prices have hardly moved, not really moved since yesterday, but the market starts a little bit more friendly today. We can see some coins doing really well, like Harmony One, 9%. Yeah, Bitcoin is sort of moving sideways with a small rally into resistance. So I'm still watching if this is off the 10th of March low, a so-called 1-2-1-2 setup. Where we are now in this orange 1-2, and in this 1-2 we are coming down in the wave 2 at the moment, which is a WXY pattern. I've relabeled that as a WXY now. It fits a little bit better, and within the Y wave I have an ABC. It is just best to how to fit it in to the structure, because the move up looks corrective, but it is quite strong compared to what came down here. So a B wave makes sense, and then I'm watching if we can still get a C wave out of this resistance area. Above 28,466 we might talk about a direct breakout, and that the wave 2 was again very shallow, but the wave 2 doesn't really have a clear three-wave structure, so I prefer to get that additional low, which is pretty much in line with Ethereum as well. Ethereum has a slightly different count, but it is still looking likely to get one more low. Now again, not guaranteed. It broke to the downside. Did highlight to you yesterday that we had this possible throw over, which is basically a fake out above the wedge pattern that often indicates a move down is coming. We then saw it in the FOMC live stream that we did, that we already saw that engulfing red candle, and in the end it fulfilled expectations in that it came down. Actually, typically what you get is the first target of the wedge breakout is the beginning of the wedge. You can see that here super accurately came down to the beginning of the wedge. That is generally something you can keep in mind. It's typically the beginning of the wedge. It's more of a general rule, but it is what it is. But that doesn't mean it needs to be the completion of the downward move. It could just be the first leg of a three-wave structure. You can measure that. So the length of the A wave, and then we take the retracements, which are listed here between 27,825 and 28,466 with the golden ratio in between at 28,090. As long as we turn around here, we can expect a C wave to the downside, and that would work out quite well in terms of where it's going to. Because let's face it, if it comes down from here, and it might not do much until the stock market opens, but you are probably looking for the 1-to-1 ratio as a likely target. And then we talk about from here. Yeah, I mean, it can still go higher. That would adjust targets a bit. But from here, and I have no confirmation it is coming down yet, but it's just hovering sideways. But the 1-to-1 ratio from here would be 25,581, very close to the golden ratio of the retracement, which is 25,724. But this is again against 24,942. As long as we're holding that, this orange count is valid and is going to remain the primary count. What happens if we drop below it? Well, if we get a meaningful break below it, then I'm watching if we can get significant support in this previous low area of the 15th of March. We talk here about the 24,100 area. This is also based on the on a different scenario, the yellow count. So if we say in an alternative, it could be that wave 1 finished here at the peak yesterday, and we're now coming down in a deeper wave 2. That wouldn't fit so well with Ethereum. Also wouldn't fit so well with the idea that Bitcoin is outperforming ETH at the moment, which it is based on the ETH BTC chart. And however, also here I would look at a possible A wave down, a B wave up, and a C wave down. So it doesn't really make too much of a difference. It's all about which support level are we holding. Yeah, and these are the two bullish scenarios. You should now be aware of all the relevant levels. What I would like to do is also to zoom out a little bit and tell you what happens if we even drop below the yellow support box at 21,557. I don't see that at the moment. That's why it's only the alternative, but it's of course possible. And if we get back into the green range, well, it would still be an overall bullish scenario. It would just mean that technically, temporarily, we are going to come down around 30%. It is only the alternative, and it's just sort of a fallback plan that you know what is most likely going to take place if we drop below the orange box and the yellow box and lose all support and fall back into the large main wave 2 area. I still have that on the chart just purely because the correction that started on the 16th of February was so short compared to the 5-wave move up since November, time-wise, yeah, not FIB-wise, but time-wise. So we're looking at the idea that, okay, this could have possibly only been an A wave. This here is a B wave. It actually has some kind of a 3-wave structure because you can count it as a 1-2-1, so ABC, and then it could come down in 5 waves. That's something many people don't talk about, but I think there's still a likely option. The reason is, even though it's overshooting more than it should ideally do in a B wave, but it's just this small issue that I have with the chart. It's not perfect. It's a bit too short. So yeah, let's see. Let's see what is going to take place here. But ideally, we are watching the orange box first for a possible reversal. Okay, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.